Well, let's take a look now at that Kenya market, and they had a couple of very strong days on Monday and Tuesday after the relief, I suppose, at the resolution of that presidential election, up 3% on Tuesday and 3% on Monday as well. Well, a bit of a quieter day yesterday, and not surprisingly, perhaps pulling back there a fifth of a percentage point to 5030. No surprise there. And then, of course, the shilling also 84.8 there, and just a slight drop there, 0.06% with the currency. And that tea story is interesting, and I'll talk to that in a moment with our market commentator from Kenya is Einstein Kihanda. He is Chief Investment Officer at ICEA Asset Management. That tea story is interesting, Einstein, but let's talk about the market first. That 3% number on Monday and on Tuesday both looked quite dramatic. The market seldom moves by that much in a day, certainly not 2 days in a row, but a little bit of profit taking and back to normal, is it?
Yes, I think you're right about the upsurge in the market. But actually, it's on Tuesday because Monday was the Easter Monday. And I think the context is really about the issue to do with the elections, as you've quite rightly pointed out. Actually, the whole month of March has actually been one of anticipation in terms of, one, we had the election results, and then there was the petition, and then there was finally the ruling by the Supreme Court on Saturday, over the weekend. And I think the surge in the market on Tuesday was actually as a result of, I would say, pent-up, demand and a lot of the anxiety that had come to an end after the resolution of the market of the election issue. So that, I think, is a major factor, and a lot of investors were very keen on awaiting the outcome to make any investment decisions. So I think the upsurge in the market on Tuesday is a reflection of that exuberance. And then followed by the slight downturn on Wednesday, I think is a cooling off. And I think going forward, a lot more of the price movement, I believe, is going to be driven by market fundamentals. We don't expect a surge across all the counters, but I think it's going to be on a very selective basis.
Yeah, that presidential election was hanging over the market. We started talking about it towards the end of last year. I confused myself there with saying Monday and Tuesday. I was mixing it up with the United States, of course, where they work on Easter Monday. I double counted the 3%. Yeah. But banking stocks were down, and we actually commented that banking stocks were among the big gainers in that big rise. So what's happening in the banking sector now?
I think in the banking sector, I think yesterday we saw the major movement was, I think, in Equity Bank. Again, I suppose it's also part of that upsurge that we saw in the market on Tuesday. Obviously, a lot of the banks have reported very strong results, strong earnings, basically because of the high net interest margins last year. And I think with the factoring in of the results and dividend announcements and finally the market absorbing all this information, I think there's therefore been a rather cooling off of the market. But as I said, we expect that going forward, we're likely to see more and more activity based on the fundamentals of the market. So again, it's really a reflection of the exuberance on Tuesday, but a cooling off, the following day, which was yesterday.
Perhaps a bit surprising that the cement makers were down, because if you've got optimism, and Kenya is a growing economy, cement stocks are the ones that you'd expect to be buying into, because it's a simple indicator of investment and growth in infrastructure. Cement makers ARM down 3% and Benburi 6%, quite a big drop there.
Yes, yeah, quite true. Yeah, also quite a big drop. But if you look at the trend over the last few weeks, especially ahead of the announcement of their financial results, there's actually also been quite some significant momentum in the share price for ARM. Yes, and in terms of infrastructure, it's an expectation that there's likely, it's expected that the infrastructure development may be a key factor in terms of driving the economy. But we're also looking back at how much we've also seen in terms of infrastructure development over the last few years, particularly public sector, the roads network, and therefore. Again, a cooling off, also a reflection of maybe the market also trying to, analyze the implications of the new government and expectations about infrastructure development going forward.
Also, what's not clear is with infrastructure development and investment generally, the decentralization of political authority, on the one hand, sounds very good, devolving authority, more local authority involvement in government. On the other hand, that could create a hiatus as the system changes. You have a bureaucracy moving around, you have people moving from one job to another, devolution of power, who owns the budget. That could actually slow things rather than speed things up in terms of growth.
Actually, right now as we speak, there's actually quite a lot of, I would say, in the news regarding the implications of the new structure. There's obviously appears to be a tough war between the devolved government and the existing central government, as the newly elected officials assert the authority and also try to understand what their role is likely to be in terms of making these decisions, particularly with regard to resource allocation. So, these are still very early days, but there is already that indication of the fact that it may not be a smooth sailing, as was expected, because each arm of government will also be likely to, want to play a key role. So that, yes, it requires a bit of time for us to be able to understand how that is likely to be utilized to ensure that there is growth, in the economy at the end of the day.
Yeah, often a big gap between theory and practice, and perhaps the two words that were key there were
Yes.
turf wars. Turf wars are inevitable
Yes.
when you shift budgets around and people gain and lose power.
Yes.
Let's look
Yes.
at East African breweries, now the top in market cap on the exchange, up 10% in a month, pushing Safaricom into second place.
Yes, if you look at the half-year results for Safaricom, they were actually down, and I think the biggest factor with regard to East African breweries was really the financing costs as a result of due to the fact that they had to incur quite some huge capital expenditure to buy back the 20% shareholding in Kenya breweries. And despite the fact that the earnings are down, I think the market has still, looked at favorably at the counter. There's been a lot of foreign investor interest, and I think that has been contributed to a big factor in terms of accounting for why we've seen that upward movement in the counter. Although, of course, underlying that, there's also been an improving trend towards the growth of the wines and spirit business as opposed to the beer market. So I think those two factors, the foreign investor element as well as the underlying factors with regards to the wines and spirits business. And I think also in the long term, once they're able to complete the financing, they've captured all the financing costs, I think the long-term outlook is also fairly strong for East African breweries. So I think there's also a long-term outlook at play here. Yes.
Can't go wrong with breweries, as one of my friends always says. People will always want that product. Then Pan-African Insurance, a 3.5% stake in Family Bank, a financial services sector kind of cross-investment there. What's the significance of that?
I think Family Bank is a bank that are now, it had been one of the smaller tier banks, and I think what's been happening over the last year or so is actually a change in management. We've also seen the main shareholder divesting in terms of and allowing entry of private equity investors. So last year, Family Bank had a rights issue, and they raised Kenya shillings, about 1.2 billion Kenya shillings, and quite a number of investors came into the bank. And I think looking at the full year results, the bank had very strong earnings, and so a lot of the investors like Pan-African came in at the point of the rights issue. So I think the indication is that it's a growing bank, and seeks to be able to play actively in the financial services sector. So I think it's a reflection of the fact that there is more and more interest in the middle tier banks in view of looking at growth in the long term.
Just to finish off, Einstein, interesting, not necessarily market related at the moment, but the tea export, very important to Kenya, huge source of foreign exchange and export revenue rather. Tea output up by 109% in February compared to the previous February, but I saw that the exports fell. So does this mean there's a tea dump, a huge surplus of tea?
You're saying in terms of yes, the downturn. I think in terms of the exports, yes, it could be a reflection maybe as a percentage of the overall exports. That declined. I think compared to the same period over the last 12 months. I think in terms of part of it also has to do with the value tea prices in the international market. I think that also reported quite favorably compared to 12 months ago. But I think, yes, it's a source of concern when you indicate the fact that the exports were down, especially because when you look at the capital account, as a country we continue to face challenges in terms of maintaining our balance between imports and exports. We continue to import far much more than we export. So I think it's a source of concern that needs a lot of attention.